Hello Forex traders, and I'm sorry I haven't made any videos lately, but this one is dynamic currency strength. And to understand the movement of Forex pairs, understanding the underlying currency strengths, being able to estimate them in real time, and formulate trade expectations based upon them is a major new push that we're incorporating into HyperScalper and HyperBot. So anybody wants to get involved, you can always contact and talk about this. But let me just take you through some early work on dynamic currency strength. So first of all, you've probably seen, if you use the words currency strength and search in Google, you will see that there are quite a lot of people talking about currency strength. But there's some debate about how it should be measured, how useful it is on short, medium, longer term time frames, and so on. So a bunch of R&D work was done here, and we're just going to show you the results of that. So briefly, let me explain to you how dynamic currency strength and currency strength predictions work. So let me just freeze this display right here for you. So you can see that we have the pound, GBP. This is a little darker, the New Zealand dollar, the euro, the Swiss franc, there's a US dollar in there, Japanese yen, Canadian dollar, that's 7, and there's one missing currency in there somewhere. I think it's the Australian dollar. So we have 8 major currencies. Now, these currencies are the ones that participate most strongly in the currency pairs that we trade. So in Forex trading, you know, we buy or sell a currency pair. And so the first thing to understand is that there are considered to be 8 major currencies which we use in currency strength estimation. So here we have the HyperX currency strength monitor. So you can see the currency strength monitor. This is running in the JForex platform, and it is looking at various things with respect to the currency pairs, the 28 currency pairs. But the currencies themselves are here. So we have the Australian dollar, CAD, pound, US dollar, New Zealand, Swissy, euro, and yen. Now these are ordered from strongest to weakest currencies. So we assign a rating value to each currency. And the rating values can be positive or negative. Other systems vary. It doesn't really matter so much how you do this because these are going to be relative currency strengths relative to a time frame. So we have the ability to give you this information in a tabular format. And we can also look at each individual currency pair. So let's say, for example, euro US dollar, which is something that most of you are familiar with, if I can find it here. So here's euro US dollar. So what this is telling us is that if we use a 48 SMA with a 1-hour bar over a 400 SMA 1-hour bar, we're going to see that euro US dollar is 80% up into its daily range. So it's 80% of its prior daily range. And it's also shown some pullback, which is interesting. So there's a bunch of numerical information that can be given to you. This can be extracted and put into a spreadsheet in a comma-separated format. You can do some calculations or predictions based upon that. But let's get back to the basics. So the basics are that we have these currency pairs. Pound, euro, Swiss franc, US dollar, and so on and so on and so on. These currency pairs generate 28 currency pairs. Now let's just show you the currency pairs that are generated from all of these. So here are your currency pairs. So as you can see, it's a great big mess because we really can't distinguish groupings of any sort. I mean, we can say that pound CAD and pound yen, those two are the currency pairs which are the strongest pairs at this moment in time. We can also say that, you know, pound or CAD Swiss franc is the weakest pair, but we have all of these pairs in the middle. It's very, very difficult for us to see what's going on. So as I was saying, we need to have some filtering because it's difficult to look at all of these 28 pairs and make any sense out of them. Here the Canadian dollar Swiss is of course the lowest, and the pound Canadian is the highest or strongest based upon currency strength predictions. But what we need is some ability to filter all of this so that we can make some sense of it. So what we can do here in the filtering panel is to filter all of any currencies which contain the United States dollar, the USD. So for the moment, don't pay any attention to these other aspects, just these checkboxes on the left. So all of these currencies here are ones containing the US dollar, either as the base currency or as the quote currency. And one of the most important things to understand about currency strength trading and Forex trading in general, and I guess this is obvious, I'm not trying to insult your intelligence here, but every currency pair is like a fraction, A over B. So US dollar over Canadian dollar. In a fraction, if the top portion of the fraction, the numerator becomes larger, the fraction becomes larger. If the denominator becomes smaller, the fraction also becomes larger. So in other words, the price of the US dollar Canadian would go up. If either the US dollar or the Canadian dollar changed in specific ways, US dollar strengthens, Canadian dollar remains the same or weakens, the US dollar Canadian dollar will go up. Now this should be obvious to you as Forex traders, but it's something that many of us don't think about. So if we know the currency strengths of the underlying currencies, then we can actually predict what's going to happen. So here, for example, if we saw that the Canadian dollar was weakening, as you see here, the Canadian dollar is weakening, and the pound is holding the same or strengthening slightly and is certainly the strongest currency at the moment. So the pound is the strongest currency and the Canadian dollar is the weakest currency. We know immediately that the relationship between the pound and the Canadian dollar, the pair, pound CAD, is going to be moving in a specific direction. So if we look at pound CAD, we'll be able to see the result of that real-time relationship. I mean, this is all real data in real time. So what you can see here is that pound CAD has strengthened dramatically. And that's reflected by the fact that the pound is very strong. And that's on the numerator of the fraction, top parts, the base currency, whereas the CAD is very weak, and it's in the denominator. So as the denominator of a fraction gets smaller and smaller, the fraction gets larger. So here we have an acceleration in which both the pound is increasing in value as the numerator of the fraction, and the Canadian dollar is decreasing in value as the denominator of the fraction. And so we have an accelerated movement to the high side. So again, I'm sure you all know this. So what we're interested in doing is looking at specific currency pair groupings. So these are all the currency pairs we're taking into consideration, which include the US dollar, either as the base currency or as the quote currency. Now these will move in opposite directions because there are certain inverse relationships here. But now let's look at the euro. These are all of the currency pairs which contain the euro, either as the base currency or as the quote currency. So in a fraction, we have a top over a bottom, A over B, euro over CAD. That happens to be the strongest. Let's go to the British pound cluster of currencies. So I'll call it a currency cluster. So these are all of the currencies which involve the British pound. Moving down, Swiss franc. These are the currencies involving the Swiss franc right here, either as the base currency or as the quote currency. Moving on down to the Canadian dollar. These are the Canadian dollar currency pairs. Australian dollar. These are the Australian dollar currency pairs. And Japanese yen. These are all the yen pairs. Interesting to note about the yen is that the yen appears as the quote currency, the bottom currency, the denominator of the fraction in all of the tradable pairs. So that the yen doesn't appear as the first currency, the base currency, the top currency, or the numerator, whichever way you want to think about it. And the New Zealand dollar. So these are the clusters related to a particular currency, a specific currency. Again, whether the currency appears as the numerator or as the denominator of the currency pair. So let's just pick something like the euro here and look at its currency pairs. So you can see that we have Euro CAD, Euro Aussie, Euro New Zealand, Euro Yen, Euro US dollar, Euro Swiss franc, and Euro. So if we were to eliminate everything where the euro appeared on the top, if we were to eliminate that, we have no observation. So there are no currency pairs where the euro appears as the top. Similar to the Japanese yen, there are no pairs in which the Japanese yen appears as the top currency. Now by top, I just mean the top side of a fraction, A over B. The base currency over the quote currency. So what we can do here, if we pick the British pound, for example, we will see that sometimes the British pound appears as the top or base currency, and sometimes it appears on the bottom. We can eliminate everything where it appears as the top currency, A over X, where A is the currency. We can eliminate all of those. And we can see that there is one currency pair where the pound appears as the denominator of the fraction on the bottom of the pair. So we can also then we can eliminate that one and look at just the ones where the British pound is on the top. So if the British pound is on the top and the British pound is in a strengthening trend, then all of these pairs as a group in general have to go up. They must go up. Hence the importance of understanding the underlying currencies and currency strengths. Because if we know the currencies and we know the currency strengths, we can, with a high degree of certainty, predict where the currency pairs are going to go. Again, this may be obvious to many of you who are advanced Forex traders, but not so much if you're not so advanced. Now let's look at a specific currency pair. Let's look at pound over yen. So these are all the pairs where pound appears and all the pairs where yen appears. Well, of course, it's a little bit confusing. There are quite a few of them. But if we use this pairs mode here, then we can focus on just the one pair that we're interested in. So if I put it into pairs mode, we're looking at pound yen. Then we're able to, I need to eliminate these others over here that I was looking at before. So let's not consider this over here. We have the ability over here to select another pair, a third pair, and a fourth pair. But let's not think about that right now. We're just interested in just using this column to specify a specific pair, pound yen. So here's pound yen. And we can see that it's relatively well elevated. So let's look at how pound yen responds to the currency strength changes. So let me just make this a little bit smaller here. All right, so pound against the yen. So we're showing the pound as this line here is the British pound, right there. This white line is the Japanese yen. So we can see that the yen has done a little bit of strengthening, just a little bit of strengthening. And remember, it's on the bottom part of the fraction. It's on the denominator of the fraction. So that strengthening is going to make the bottom part of the fraction larger. It's going to reduce the price. This has been weakening. Now, because there's been as much strengthening on the bottom of the fraction as there has been weakening on the top of the fraction, the price of pound yen is relatively static. If, on the other hand, we had a constant value for the pound on top, and the yen had been strengthening dramatically, then it's inevitable, it's mathematically required that this thing is going to drop. Any fraction where the bottom part of the fraction gets larger is going to drop. Forex pairs are just like fractions. So everything you know about fractions applies to Forex pairs. So we have underlying currency strengths affecting individual currency pairs, which are related to each other as the numerator and the denominator of fractions. So I think we'll cut off this video right now and move on to the next video. But essentially, you can see that we really have to be able to filter some of these currency pair relationships, and also need to have trend indications so that we can go from very short term, these are very, very short term estimates of currency strengths, where yen is the weakest currency, Australian dollar is the strongest currency, US dollars here, Swiss franc is increasing. That reflects a momentary change from moment to moment in currency strengths for scalping purposes. Over here we can see a little more of the trend. So the euro has got an upward strengthening trend here, and the Australian dollar has got a downward trend here over about 30 minutes or so. So we know where the euro Australian dollar has to go. It has to go up. Let's just see what the euro Aussie has been doing. Euro Aussie predicted is up. Let's look at the actual Forex pair euro Aussie. And you can see that the actual pair has gone up in line with the prediction, which is based upon the relative currency strengths. So we'll turn it off here, and I hope you're at least a little bit interested in currency strength-based understanding of the Forex market. There's a lot more to come, and I'll see you in part 2. So for now, if you have any interest in HyperScalper, HyperBot, HyperX technologies, you can certainly go to HyperScalper.com, contact us, and find out how you can use this for your trading. These systems apply to Dukascopy, the best retail Forex trading brokerage in the world. And for U.S. clients, we have a way through FXDD US to connect to Dukascopy. So no problem if you live in the US. So for now, I'll wish you good trading, and I'll catch you later, guys.